In my weekly analysis for gold and silver, we had talked about the levels to go short, which is at 1740 and 1900 levels, precisely both trading around these levels. Now, what is going to happen today? Which position you should take in order to make profit? We will see with the help of candlestick charts and indicators. First, we'll look into gold, followed with silver. Do watch till the end and do listen to it carefully. Do note down the levels. And yes, do not forget to like, share, subscribe and comment. Do not forget to press the bell icon. Missing on to subscribe, definitely you are missing on the profits. Next update on gold will be up before the US cash session. Now this is the hourly chart. Look at the hourly charts. Pressing at the bottom, 1745 levels, lower highs, willing to give a breakout. Once it gives a breakout, see this zone here at 1750-52. This is going to be the first resistance level if it tries to rise. And then on the upside, 1758. Just be watchful. These are going to be the next resistance level. There is a strong resistance at 1758 and then 1760 levels. I'll be watchful of these levels. Directional movement is bearish. Stochastic is oversold. MACD is bearish and it can converge crossover for a bullish move. Let's watch more. RSI at bottom there. Look at the 2-hour charts. On the 2-hour charts, see on the upside there is a clear resistance there which it failed to pass, that is at around 1748. See 1748, as I shared in the hourly charts also, you have to be watchful of 1750-52 zone. If it breaks past this zone, it may try to hit 1756, 58. 58 is definitely a stronger resistance and then 60 levels should come into picture. So be careful at 58, 60 levels if it continues to rise from here. Directional movement is bearish still. Stochastic is oversold. It can bounce back a little. MACD is bearish. It is trying to converge and crossover for a buy move. RSI at bottom. Likewise on the 3-hour charts. Now look at the 3-hour charts here. On the 3-hour charts we have seen 3 candles, and see one more thing here is, see the lows there are very well connected and the highs are still further lowered here. So it implies that it is bearish and it may try to break. So where you can go short? You can go short at 1744. Once it drops below 1744, it will call for further bearishness. Then you can expect it to drop till towards 1740 is definitely a stronger support, and then 1736 will come into picture. Below that we may see a stronger fall. On the upside, yes, you can go long if it breaks past 1752. Beyond 1752 you can expect a stronger rise. Directional movement bearish. Stochastic is oversold. MACD is on sell side. RSI is oversold here. So on the 3-hour charts, most indicators are oversold. Hence, it may try to probably bounce back a little. On the 4-hour charts too, almost the lows are done. Look, it is trying to break out of this lower highs, lower lows kind of move. And once it tries to trade beyond, in fact, 1749 levels, yes, it may try to attempt and achieve 1750-52 zone first target, and then 1758-60 zone. This is the next target. If it breaks past 1760, rather I will say it till 1762 and 64 levels, it has got very good resistance on the upside. Yes, it may try to recover till there. There is a probability exists for it to recover till there. Directional movement is bearish. Stochastic is oversold. MACD is on the sell side, willing to converge. RSI is oversold here on the most indicators. On the 4-hour charts, it is oversold. Now look at the daily charts. See on the daily charts, precisely it is formed 3 candles now with well connected bottom out there. It has to breach one of the levels such that it can continue with the bearish momentum. Else once it goes past 1750, yes, probability is there. Then right now if it breaks past this zone, see it has got lot much of move there on the downside to cover. See, it is going to breach this channel first of all, and then you can consider that as reversal. It may try to come back to 1760, 1765, and on the upside the largest and strongest resistance at 1775, 80 levels. So yes, you can consider that it may rise only beyond 1750, 52 zone. Once it breaks past 1750, 52 zone, I think we may see it hitting 1758, 60 as the first target. Then 1762, 64 zone is the next target, and beyond that it will try to hit 1770 and 1775 levels, which is going to be the strongest resistance. This is the 20 period moving average at 1775, which may give it a good resistance. Also remember, it is trading at the bottom of the Bollinger Bands, and the channel out there probably once it sustains above 1750, 52, you can stay long. Directional movement is bearish here. Stochastic is oversold. MACD is still bearish. It has just crossed over 4 candles apart. It can retrace again a little on the upside before it continues with the downward momentum. RSI trading flat, and on the weekly charts, see, it has formed a bottom out there trying to rise from here. So yes, if it breaks below 1740, then you can again stay short. Probably it can rise a little till towards 1760, and then 1770 levels are also possible. It can rise till here, and then a drop from there is also equally likely, and it can try to drop from there possibly. But once it breaks beyond 1775, 80 zone, it won't come back. Now, considering for the day, you can go long above 1752, and you can go short below 1742. Above 1752, first target 1758, then 1760, rather I will say 1758, 60 zone, then 1762, 64 zone. Then it may try to achieve 1770, 1775 level. If not today, by tomorrow it may try to attempt and achieve these levels. On the downside, you can go short at 1742. Below 1742, nearest resistance is at 1739, 1736, and then 1731 levels. Below 1731, we can see it hitting 1725, 1718, and then 1700 levels. So take your positions accordingly. On the downside, go short only once you see it trading below 1742. On the upside, you can go long at 1752 levels. Take your positions accordingly. Let's have a look at. And yes, if you want to support the effort, you can become a patron, or else you can join my mentorship batch if you want to learn, or you can join my signals group if you want to just trade as per the signals. Reach out to me for more details. Becoming a patron is the easiest thing, hardly cost anything. Just support the cause. Their link is mentioned in the video and channel description. Now look at silver on the hourly charts. Higher lows, higher highs, trying to trade within this channel. Hence, it is very clear that only short entry I will recommend is below 1895. If you see it trading below 1895, you can go short. Else, till the time it trades above 1900, one can stay long. That is what it appears. The next target should be at around 1915, 1920 zone, which is going to be a good resistance. Directional movement is bearish. It is willing to converge. Stochastic looking upwards. MACD has crossed over on the hourly charts, and it is divergent and it is bullish. RSI 2 is looking upwards, indicating a little bullishness on the hourly charts. On the 2-hour charts, you can consider that it is trying to reverse a little, but I will be watchful till, see, first thing is I will be watchful till 1910, then 1918 levels, 1920 and 1930. These levels are strong, but 1940 is the ultimate level which one should watch out for, which if it passes by, which if it trades above, definitely we can see stronger bullish moves there. Directional movement is bearish, willing to converge. Stochastic looking upwards. MACD is willing to converge and crossover. It is right now trading in sell. RSI is oversold. On the 3-hour charts, appears we have seen a reversal here, and it is trying to reverse. The next candle will decide. Once it trades beyond 1920, it will call for a stronger bullish move. The next target should be 1940 and 1960 zone, which it may try to achieve, if not today, possibly tomorrow or day after tomorrow. Directional movement is bearish. Stochastic is oversold, trying to rise from here. MACD is bearish, trying to converge. RSI is oversold, hence a bounce back is evident that probably we may see a rise in silver today. Look at the 4-hour charts. On the 4-hour charts too, it is trying to show you a reversal. The next candle can be strong enough with the stop loss at 1900. We can, or rather I will say with the stop loss at 1895, one can stay long. That is my recommendation. But then you should watch out for 1915, 1920 levels, and then 1930 and 1940 levels. It can rise till there, but there is a stronger or larger resistance at 1940, 60 levels. The directional movement is bearish. Stochastic is oversold. MACD is bearish, trying to converge. RSI is oversold. So most indicators on most time frames are oversold, trying to rise from here. Now look at the daily charts. Flat bottom, and with the flat bottom it is trying to reverse. It has given a reversal indicator, can come back till towards 1920, 1930 levels, and in fact it can see now if silver tries to rise, how far it can go. It can come back to 1980. See the 50 period moving average situated at around 1960, 1970 zone, and then the 20 period at 2020 levels. So we have seen a good sharp fall in silver, and remember what it is trying to do. Look here, it is trying to trade in this channel. So still it's not bearish until and unless it breaks below 1800 levels. It is still not bearish. It is still trading in this bullish channel. It was a retracement, higher highs, higher lows, and it can try to rise from here. This is a good entry to go long on silver. With the stop loss at 1895, you can stay long on silver. Take your positions accordingly. Trade with stop loss, trade with the trailing stop loss. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon. Thank you very much. Have a great profitable trading day ahead. Thank you.